Because it has grown to 58.62%, the stock now makes up 26% of my entire portfolio. Hey everyone, I'm Chris and welcome back to the channel where we talk about investing, real estate, and saving money to help you guys achieve financial freedom. In today's video, I'm going to share with you guys the 5 stocks that I own and how it's doing in terms of its growth. If you followed my journey for a while, you would know that I only started investing in the stock market last year because lockdown happened and I finally committed to learning about the stock market. So I'm an absolute beginner and I still have so much more to learn. So just a disclaimer to people watching this video, don't buy a stock because a girl on the internet is talking about it. Do your own research, and this is not financial advice. I've also had people ask me before what platform I use to invest, so I use Hedge and invest in the US stock market. Like I've said, I started my stock market journey last year and I would do day trading or swing trading, and it was fun for a while. I would wake up at 1:30 a.m. in the morning, buy some stocks, sell some stocks, and then go back to sleep, and then the next day go to my day job as a nurse. However, when daylight savings happened, I would wake up at 3:30 a.m. in the morning, and that stopped being fun. So now all of my investments, whether it's stock or index funds, are all long-term positions. First stock is Fiverr International. This is the latest stock I bought because in August 5, the quarterly reports came out and it was outstanding. However, the stock went down 24.8%. This is actually a stock that I've been watching for a while, so the next day I saw it as a great buying opportunity. However, after that, it still went down and I'm currently 7.67% down. I'm not worried about this at all because this is a long-term growth stock and it will recover. I also believe in the company, and I've actually mentioned this company numerous times on my channel when I talk about freelance work. The next stock is Amazon, and I've been holding Amazon since Feb 2021, and at the moment it's also at a massive discount because earnings report came out July 30th. That's always a catalyst and investors have been selling off, and because of that I'm only up 3.14%. To be honest, it's moments like these that make me want to go back into swing trading. Like for example with Amazon, you could sell right before earnings report and then buy back in when it's at a sizable discount. The FOMO is real. However, you could also lose a lot of money that way. Holding long term is still better than day trading unless you're a day trading expert. Tesla is next, and my Tesla stocks are only up 5.86%. In August 16, there was an investigation announcement regarding the autopilot feature of Tesla because there were 11 autopilot related accidents since 2018. And because of that, Tesla stocks went down. However, I still believe in this company. I believe in it enough that I want to buy a Tesla for myself because first of all, Tesla reduced the price of the Model 3, and also the New Zealand government is giving more than 10% cash incentive if you buy an electric vehicle. However, I would never indulge in myself that way because I'd rather spend $50,000 and invest it into the stock market rather than buy myself a smart electric vehicle. My next investment is an index fund, and it's my favorite is the S&P 500 ETF VOO. VOO is actually my very first dabble into the stock market. I remember my heart pounding before putting $1,000 into VOO. I was also excited because it was at a discount at that time, but a few days later it still went down because of the pandemic, and I was sad for a little bit, but then I reminded myself that it doesn't matter because if you compare the price now to 20 years later, the price now will still be at a discount. So I still buy VOO regularly. It's currently up 26.81%, and this is also one of my biggest holdings, making up 25% of my entire portfolio. My fifth stock is up by 58.62%. I want you guys to comment down below what you think it is. It's a well-known company. You've heard of it. It's something that you use every day. Think of the likes of Facebook, Apple, Google, Microsoft, or Netflix. Because the stock is doing so well, it now makes up 26% of my entire stock portfolio, and the stock is, drum roll please, it's Alphabet Inc. Class A shares, or better known as Google. The Google product isn't only the search engine, it also includes other products like Google Maps, Google Chrome, Google Cloud, and other products that doesn't have the Google name on it like YouTube, Fitbit, and Nest. Whether it's at a discount now or not, I still believe that this stock is a great stock to hold long term. My overall return from my growth stocks and index fund is 19.83%, and if we include include the time that I spent day trading and swing trading, the overall return of my entire stock portfolio is 26.23%. If you compare that to what banks are offering, if you put your money into a savings account, the return is 0.05% per year. If you put it into a serious savings account, it's 0.20% per year. And if you put it into a term deposit with a minimum $10,000 invested, that's 1.4% per year. This is obvious to me that I'd rather put my money into the stock market rather than have it sit in a bank and depreciating in value because of inflation. I hope this video motivates you guys to start investing into the stock market. For the longest time, I really wanted to start investing. However, I was scared and it was intimidating to me. And now a year later, I'm really glad I did it. And I wish I had started sooner, because the sooner you start, the closer you get to your financial goals. And people have always said that the best time to invest into the stock market was 10 years ago, and the second best time is now. If you want more videos about stock market, I actually have a stock market 101 video. I'll put the link right here so you can check it out. Thank you guys again so much for spending your time with me, and I'll see you guys next week. Bye!